Practical preparation for gap trading like a pro. Practical preparation for gap trading like a pro. This tutorial is to show traders, day traders, swing traders, position traders, how one can prepare oneself for gap trading like a pro. I recommend to traders to watch the full length of this video so they may understand clearly how they can prepare themselves for gap trading setup. All right, let's get started. The stock that we are looking at here is Liberty Lila Group, Class C. The EPIC is Lima India Lima Alpha Kilo, LILAK. This is a Nasdaq 100 stocks, okay? So how do we prepare for gap trading, all right? I want to show you very simple steps that you can follow if you want to trade gaps like a pro. So you want stock gap up, stop gaps down, all right? How do you prepare yourself for taking valid trading signals like a professional traders because a financial security has gap up or gap down, okay? The first step is to highlight the width of the gap, all right? So for this stock, you can see that the stock gap down, here, right here, you see, it gap down. I'm going to color the line now into green. It gaps down from the green line to, okay, the red line. Pay attention carefully. So it's a gap down. It gap down. It's bearish. All right. It gap down from here to here. So you want to see, you may say, John, why not here? Because this candle here, we are on a daily chart. The opening price for this candlestick bar is the red line here, not here. So that's why I said the stock did gap down from the green line to the red line. So pay attention to the candlestick that you are looking at, okay? Carefully to highlight the correct width of the gap. So this is the first step. So gaps down from here, the green line to the red line. That's the first step for the preparation. The second step, we will use a Fibonacci retracement of the gap. So it gap down, we start drawing from the starting point of the gap, okay? Starting point of the gap to the ending point of the gap. So it gap down from the green line, right here, down to the red line. Where is the 50% Fibonacci retracement level? That's the pink line here. So first step, we highlight the width of the gap, drawing where the gap has started from to where the gap has ended, okay? In the second step, we will highlight the 50% Fibonacci retracement level of the gap. That's the second step. The third step, my friend, we will highlight the 138.2% Fibonacci extension level of the gap. So because the stock gap down from the green line to the red line, we will use a Fibonacci extension from where the gap has ended to where the price has started, and we highlight the 138.2% Fibonacci extension level. Follow my cursor. 138.2 is the orange line here. So first step, we highlight the width of the gap. Second step, we highlight the 50% Fibonacci retracement of the gap. The third step, we highlight the 138.2% Fibonacci retracement of the gap. The fourth steps is to know what type of gap we have here. What is the type of gap? Is it a continuation gap? Is it an exhaustion gap? All right. Is it a breakaway gap? Now, I will not dwell on the type of gap in this video because otherwise the video will be too long. The purpose of this video is to show traders how one can prepare for a gap trading. So the fourth step is to ask the correct question. Which type of gap is it? Is it a continuation gap? Is it a breakaway gap? Is it a continuation gap? Is it a speculative gap? If you want to know more about gap trading, go to www.dayprotraders.com, click on OK, trading gaps, OK, methods, all right, trading gaps, methods. And also you can check videos at Day Pro Traders YouTube channel, www.youtube.com/user/Day Pro Traders. Okay, YouTube channels. Okay, so the next step that we can follow, which is the fifth step that we must follow, is to ask another question, which is a very, very important question. What has caused the gap? Okay, what is the primary factor of the gap? Is it due to the economy news? Is it due to earning news? All right. What has caused the gap? This is very, very important. So these are the 5 steps that we must follow if you want to prepare for gap trading. So first thing first, my friend, we highlight the width of the gap by highlighting where the gap has started from to where the gap has ended. Green line and the red line. So for this stock, for our preparation, we know where the gap has started from and where the gap has ended. It started from the green horizontal line and has ended at the red horizontal line. First step completed. Second step, we want to highlight the 50% Fibonacci retracement level of the gap. We apply the Fibonacci retracement level to the gap and we highlight the 50% Fibonacci retracement level. It's the pink line here. All right. The third step, we'll apply Fibonacci extension level to the gap, and we want to highlight the 138.2% Fibonacci extension level of the gap. All right, that's the third step. The fourth step is to ask the essential question: what type of gap is it? Is it a continuation gap? Is it a breakaway gap? Is it an extortion gap? The fifth step is to ask another essential question: what has caused the gap? We want to know why the stop gap's down, why the stop gap's up. We want to know why. So we want to know the primary factor that has created the gap. So you may say to me, Joe, why do we need to know the cause of the gap? We need to know because for each gap, there is a trading method to it. So that's why I refer you to trading gaps method at Day Pro Trader YouTube, or at trading gaps method at www.dayprotraders website. All right. So we want to know what type of gap do we have here? Is it a continuation gap? Is it a breakaway gap? Is it, okay, all right, an exhaustion gap? So we can apply the correct trading gaps method. Why do we need to know okay, well, what has caused the gap? What has caused the gap? It's important for us. Is it due to the economy news? Is it because of a sector being bullish? Is it due to another market leader being bearish that has caused this stock to gap down? So maybe it's not due to the fundamental, the intrinsic value of the stock that we are trading. Maybe another stock that belongs to the sector to which this stock belongs to has gapped down. The market leader has gapped down, forcing other stock to gap down. So we want to know the real cause of the gap. Very, very important. Now you may say to me, John, why do we need to know the 50% Fibonacci retracement level of the gap? Now, if a stock is going down or gap down, all right, so a stock gap down, I want to go very fast, and break below the 50%, so stock gap down, so it gap down from green line to the red line, okay? Now, if the stock gap down like this, and then start going up, okay? There is a trading method for this. That's why I want you to understand this. And it starts rallying from where the gap has ended. So it starts rallying from where the gap has ended and hit the 50% level. Some trader will will try to sell here. So if the price find a resistance here, we can sell it. The opposite is also true in the downtrend. A stop gap up and pull back near the 50% Fibonacci retracement level. And then we see a bullish signal on or near the 50% Fibonacci retracement level. we can look for an opportunity to buy using what we call a top-down trading method or a multiple time frame trading method. I cannot stress on the importance of checking trading gaps method at www.dayprotraders.com so you may understand what we are talking about here, because the purpose of this video is just to show traders very fast, all right, practical preparation for gap trading like a professional traders. So this is why we want to highlight the 50% Fibonacci retracement level of the gap. If the stock gap down, or a currency pair gap down, a commodity gap down, a future gap down, a financial instrument gap down, and rally up to the 50% and find a resistance, the bearish momentum is likely to continue. If a stock gap up and pull back near the 50% Fibonacci retracement level, and the bullish momentum is strong and find a support, near the 50% level, there's a high chance that the bullish momentum may continue. This is about why we need to know where is the 50% Fibonacci retracement level of the gap. Now, next question. Why do we need to know the 138.2% Fibonacci extension level of the gap? This is very, very important. In fact, I should charge you for this information, but I'm giving it to you for free. This is to make you laugh a bit, all right? So, if a financial instrument is going down, all right, and display a low, all right, and then rally a little bit up, okay, and then break below the prior low, all right, my friend, the first challenge for the bearish momentum is the 138.2% Fibonacci extension level. On the other hand, if a stock is going up and display a high, then pull back a bit, all right, pull back a bit after displaying the prior high, and then start going up. If the stock breaks above that prior high, the first challenge for the bullish progression is what? The 138.2% Fibonacci extension level. This is what we call a market stable data. Apart from this market stable data, there are other market stable data like the price going up, it will be in a rising channel. This is what we call market pattern. If it's going down, it will be in a declining channel. This is what we call another market stable data. If it's just oscillating, it will be confined between a resistance and a support level, which we call a consolidation or a balanced market. For this preparation, the 138.2% Fibonacci retracement level, extension 138.2% Fibonacci extension level, is a critical level that we must watch. Therefore, as we are preparing ourselves, talking about practical preparation for gap trading like a pro, we must highlight the 138.2% Fibonacci extension level of the gap. My friend, I don't want this video to be too long. I'll be talking to you now for 12 minutes. I want to wrap it up now so you may have a bit of idea how you can prepare yourself for gap trading like a professional trader. First step, highlight the width of the gap, where the gap has started from, where the gap has ended. For this stock, started from the green line and ended at the red line. Great. Next step, we highlight the 50% Fibonacci retracement level by using Fibonacci retracement level. This is the pink line for this stock, lilac. Am I pronouncing it correctly? Otherwise, okay, correct me or laugh loudly, okay? All right. The third step is what? Is to highlight the 138.2% Fibonacci extension level of the gap. It's the orange line for this stock, Liberty Lila Group Class C, listed on the NASDAQ 100. The fourth step is to ask a critical question. What type of gap do we have here? Is it a continuation gap? Is it a breakaway gap? Is it an extortion gap? We need to know. Otherwise, we will apply the wrong trading method for the gap. We want to know what type of gap we have here. The fifth essential step is to ask another critical question. What has caused the gap? So for this information, we may go to Google Finance, type in the epic of this stock, LILAC, and check the economy news on that day where the stock gap down, what is happening. If there's no information there, we may check the sector. Now we're on the NASDAQ 100, check the market leaders for the NASDAQ 100, Google stock, Apple stock. Are these stock bearish? Are the market leaders bearish? Or is there any news talking about Forex Factory? Check the economy news at Forex Factory, at Google Factory. Is there any economy market sentiment bearish that day talking about the trading triangle, the market first, the sector, before the individual financial instrument, the trading triangle? What has caused the gap? These are the steps that we must follow if we want to accomplish a practical preparation for gap trading. Another thing, why it's so important. Professionals always trade around key levels. So let me say this again to you. Professionals will always buy or sell around key level. They will never buy in a void anywhere, anyhow. They will buy around key levels. So the 50% Fibonacci retracement level of the gap is a key level. The 138.2% Fibonacci extension level is a key level. Where the gap has started from, why the price gap from there? Some people sold it there, that's why it gap down. If it gap up, some people has bought it there. So where the gap has started from, we want to know that level. For this stock, it started from the level of the price level of 69, 67. It's a key level. Somebody sold it there. How do we know? Price gap down from there. Okay? Where the gap has ended is also a key level. So in order to trade like professional traders, we want to know those key levels. The opening of the gap, the ending of the gap, the 50% of the gap, the 138.2% Fibonacci extension level of the gap. And what type of gap do we have here? Is it a breakaway gap or opening gap? Is it a continuation gap? Is it an exhaustion gap? All right. I will not dwell on that. I will refer you to trading gap method at www.dayprotrader.com or quickly subscribe to Day Pro Traders YouTube channel. The next question is what causes the gap? It makes sense. It is also powerful. All right. If you have any question, please put in the comment section. If you want me to record another video explaining something about gap trading, all right, put in the comment section. All right. If you want to add a constructive comment, put in the comment section. No spamming, please, my friend. All right. If you like this video, all right, please give us the thumbs up. If you dislike it, we want to know whether you dislike it. Give us the thumbs down, okay? Or if you love it, you say, John, this is a great video. I love this video. Feel free to share it on Google+, on Twitter, and also on Facebook, all right? If you love our videos, all right, many videos, say, John, you are recording great video. Hit the subscribe button so you may stay tuned, watch more tutorials like this. We are the TSTW24 traders talking about practical preparation for gap trading like a pro. Until the next time, enjoy yourself and be very happy. Speak to you soon.